Hey, podcast listeners. On today's episode of the Advice First podcast, we sit down with Jorge Perazzo and Fred Wachtel with Prosperitas Financial. Now, Jorge is a certified public accountant here in Santa Clarita, California, and he specializes in personal and business tax planning. Jorge shared phenomenal insights into the key aspects of tax planning, the importance of aligning your financial plan with your tax plan, and so much more. I got a lot out of this episode. It was phenomenal to sit down and hear what he had to say. I hope you enjoy it just as much. Welcome to the Advice First podcast. Welcome to the Advice First podcast. This is your host, Robert Clark. Today joining me, I have Jorge Perazzo and Fred Wachtel. Fred's with Prosperitas Financial. He's been on the podcast a handful of times now. And I mean, we always look to him for his quick-witted commentary and also financial know-how. But today we're very excited to have with us Jorge, who is a CPA locally here in Santa Clarita. Jorge, thank you for being on the show.
Thank you for having me.
Now, I am extremely excited. I've been waiting to have a CPA on the show because taxes are such a huge part of our lives.
They can be a pain.
Like there's two things that are guaranteed in life, right? Death and taxes.
That's right. That's what they say.
And so
you can manage taxes, though. You can't manage death.
That's true. That's true. You can protect against it, but can't prevent it. And one of the common themes that I love that I heard as a young professional and has always just stuck with me is it's not how much you make, it's how much you keep. And from our talks off air, it sounds like you're very keen on helping clients figure out that right balance. Jorge, do you work primarily with like employees or business owners?
I have both individuals for tax return preparation, and I also have about 40% of my business is business clients.
Wow.
So yeah, I do anywhere from full after the fact bookkeeping all the way to the tax return and tax planning, et cetera.
Wow.
Yeah.
And so obviously you would know that we're recording this after October 15th. That's the only way.
Thank God.
We were able to get Jorge in the studio. But being today's date is October 28th, 2020.
Yes.
We are 7 months into a pandemic.
Right.
And with 40% of your business being businesses themselves,
yes.
How have a lot of your clients been affected?
I've had a couple of clients be dramatically affected. One of my clients deals in props for events. They're like these, I don't know exactly what they call them, but they're these inflatable props that have different shapes, and you hang them from the ceiling, and they have LED lights, and they're designed for like grand openings and corporate events. His business went from 60 to 0 in no time flat as soon as COVID shut us down.
Oh my gosh.
And he lost all of his pending orders, lost all of his pending rentals that he had within a week or so. He probably had 1 week of revenue and then fell off a cliff. And fortunately his wife works W-2 employee somewhere, so they were able to kind of manage.
Yep.
But yeah, it was hard to see. It was hard to watch.
Absolutely.
And then I do have a client who's in a restaurant, and he got affected. Although they managed to do quite well in adapting, and he's now not fully back, but enough to where it's worth getting up in the morning and having the business.
Yes, absolutely.
So,
yeah, thankful for that. I mean, it's definitely forced creativity, and I think. Speaking of taxes, a lot of businesses will have a lot of new write-offs this year with the ways that they've had to get creative.
Oh, that's for sure. That's for sure. Just on the flip side, I also had businesses that did incredibly well. I had a business, for example, who had been meandering for years and years and years, breaking even. They'd take a little salary out of the corporation, get to the end of the year, and all of a sudden this year they took off, and they're in the cleaning business. They're in the pressure washing business.
Yep.
So all of a sudden, everybody wants their stuff cleaned, their stuff washed all the time, and they're buying detergents. And he called me for the first time I think if he's been a client for like 15 years, he called me for the first time in like 15 years and said, George, I actually have to tax plan this year. Because, I don't know what to do with all this income.
Yeah.
It's just amazing. So it's been a very fractured results, right? So you have people who just fall off a cliff, and then you have people who just, for some reason, because of what they do and the type of business they're in, they benefited. And it's been crazy. It's really been a crazy thing.
It's been unique, and your answer to that actually prompted another question that I've been thinking is with all of the federal stimulus going to businesses, as a CPA, I mean, you might, I don't know whose role it is to throw a word of caution into how those funds are applied. It's
insane. One of the biggest problems that I had with all this COVID assistance and all these packages that were being these stimulus packages is, in the advent of Google and information available online, I mean, my clients were finding out about this stuff before I was. Wow. Because I was so busy preparing tax returns and keeping up with the work. I would get the phone call from the client and go, hey, did you hear that they're going to do this and that, or that the PPP was this or this change? And I'm like, no. Yeah. But let me call you back.
Yeah, exactly.
And I'd have to actually sit down and go to the website and kind of absorb it and learn it. Of course, by the time I ended up absorbing it and learning it, I knew a lot more because I understood where it was coming from to educate the client on what their choices were in terms of what they could do or couldn't do. Yep. But the fact that they would hear something, it would just get blasted all over the news to the point where I just couldn't keep up with it. Right. And then the SBA has been, oh my God, they have this frequently asked questions, and I think they're up to question number 62 or something. Yeah. That asks all about, well, how do we get it forgiven, or when do we have to submit it, or how much is it? What's it, more than 50,000 or less than 50,000? Or in the current, I believe that in the current package or stimulus package that Congress is trying to pass, if they could ever get along, we're hopeful. So the banks have been lobbying for any PPP or payroll protection program loan under $150,000 to be automatically forgiven with just a signature. Interesting. If they did that, they would relieve so many of us from the burden of trying to prove that the person, 99% of the people who took out a PPP loan used it because they needed it, and they did use it to pay for payroll or rent or utilities. It's just, they had a threshold of $2 million to allow people to say, we're going to take you at your word that you took the PPP loan in good faith. Yep. $2 million. Wow. So you're telling me that for anybody under $2 million, you're automatically assuming that they took the loan in good faith. Right. But yet anybody who had a loan of less than $150,000, we got to sit there and do all these mathematical mental gymnastics to prove that we actually used the money in the way it was intended. Yep. Where's the fairness in that? Not to mention the fact that there's probably 4 people working at the SBA because of all the layoffs and everybody working from home and COVID and the IRS. Yep. So there's no one there to actually look at this stuff. Yep. So it's going to be really interesting to see. I've been asking my clients to use the 24-week waiting period before they have to actually ask for forgiveness. And which puts them basically at the end of the year roughly, to see what's going to happen, because if this package passes, then we wouldn't have done all the work for nothing. Right. Yeah, that's true. That's a really good point. Fred, do you ever have clients who own businesses coming to you with similar questions, or around all the stimulus and things provided to them as a financial knowledge source? Do they look to you, or are they calling their CPAs?
Surprisingly, they come and tell me that they have the money, and now they don't need to liquidate their accounts to save their businesses. Yep. But they've mostly been going to their CPAs or attorneys or whoever they need to go to. So thank goodness I haven't had to deal with too much of that, other than the fact that it's provided a lot of financial relief and a lot of mental relief, where they don't have to tap into their IRAs or annuities or their savings or their kids' college accounts. So no, I have not had to deal with that, which is thankful, because usually when the government puts a plan together, it does not work out the way it wanted.
Well, the initial PPP funding was given or done under the presumption that the COVID was going to be a 2 or 3 or 4 week thing, that we're going to shut down, we're going to take control of it, and it'll go away, and everything will be fine. Yep. And I think we were looking at 4 to 6 weeks maybe at most. Right. And then it became 7 weeks, and then 9 weeks, and then 4 months, and then it's like, and before you know it, they had to do another round of PPP, and then they had to come up with this EIDL loan, the Economic Injury Disaster Loan from the SBA, and the stimulus checks and the $600 a week unemployment and more, and now they're going to have to come up with even more, because this is going to end up lasting, in my mind, even if we have a vaccine, in my opinion, we're looking at another year at least before we start getting out from under this. That's just my opinion.
And so as a taxpayer, or as a tax professional, I guess, where do you, what red flags do you see might be issues for today's taxpayers? Like whether they've received stimulus from unemployment or from running their business and part of the PPP, is there any of that in your eyes is time out, you need to account for this very carefully? Or?
Oh, for sure. So it's not actually very difficult, and I've told my clients, I said, look, use common sense, right? If you pulled a PPP loan or an EIDL loan, don't go buy your new SUV. I mean, seriously? Because, if you do that and you get audited, you're signing under penalty of perjury that you use the funds in the way you're supposed to use them. Yep. So if you get a PPP loan for $50,000 and then you turn around and bought yourself a new Escalade, that's not going to look very good. And but the other thing too, which was very important, this was actually more of an actual relevant question that I got asked a lot by my clients who got EIDL loans, is that can I pay off this other loan that I have that's a higher rate? And the answer is no. Yeah. You were not allowed to refinance debt with the EIDL loan. The EIDL loan was strictly designed to be working capital to get you through the pandemic or through the emergency and the economic injury. And except that through the pandemic, if you charged up credit cards, then those you were able to pay off, because they realized that you had to temporarily use another source of financing in order to get through the disaster. Got it. And therefore, they allowed you to pay off credit cards of high interest rate with the EIDL loan. Interesting. But as I have the clients, can I pay off my car with this? No. Right. Can I have this other loan with the bank that's higher rate? No. I know it's 30 years at 3.75 and you don't have to start paying it for a year. It's great. Isn't it a great loan? Right. It's a working capital loan. Right. Yeah. Working capital. Yeah. Not refinancing, not buy, well, you can buy equipment actually because it's part of the working capital, but not buy a new car. Second vacation home. Do you ever find yourself working alongside one of your clients' financial professionals or the folks that actually manage their money? Yeah. I mean, I do that with Fred, and I do have one other financial person I talk to, and I work with an estate attorney. Who is he? Oh, I can't say. Well, not all clients are with Fred, right? I mean, I thought, pretty close, like 99.9%. I mean, I know we want that, but and not everybody has me as their CPA, right? How's that process benefit you? How's that process benefit the clients when you're working alongside that other professional? So I act as kind of a checks and balances against what another advisor might be telling them to do, not because they don't necessarily have their best interest, the client's best interest at heart, but they may be forgetting a tax element or a consequence of a decision, particularly, for example, in estate planning or in investment planning. They might be talking to their investment firm with Fred or someone about investing in something that's not liquid, but then I'll remind them, hey, remember that you have, this particular event happening and you're going to need the cash by then. So it's like, oh yeah, we can't really go illiquid for the next so many years or months, that type of thing. It's, and then in the area of tax planning and investing into a 401k or a SEP IRA, that's also, I work very closely with 401k administrators. It's called third-party administrators, or TPAs. Yep, absolutely. So I work with them. And are you handling bookkeeping in your office as well?
Wow. So you do all
I have a full charge bookkeeper that I give all that work to, so I don't do it.
Right. Yeah. That's a lot of work. Yeah. I mean, a lot.
We're a busy
work.
office. Busy office. We have about, I would say, we're close to about 400 clients.
Holy smokes.
Yeah.
Wow. And so how many people on your team?
Four.
And like what were the effects to you personally going through COVID? Were you working remote already for some of them?
This is actually a funny story. So on March 19th, right, we were all looking at the TV watching, our mayor say,
Independence Day, basically.
It's like, everybody go home, work from home, we're locking down, it's like, oh my God. Yeah. So I'm sitting there with my staff going, okay. And so my wife works with me, so she's one of our staff members, and we're like, okay, we're going to take all the computers home, and we're going to set it all up at home. And so we did. We picked up, I think it was a Thursday.
Yeah.
No, I think it was a Friday.
Yeah.
So we picked everything up, took it home, set up tables, put up the monitors, got all ourselves connected to the internet. So we work on a remote server, so we can always connect anywhere we are.
Yep.
And then it was a Thursday, because then on Friday, I think it was Friday, we're listening to the news again. It's like, we're an essential service.
Yeah.
So we didn't have to leave the office. And I'm like, oh my God. So on Saturday, I took everything back to the office and set it back up, because there was no way I was staying home. And the reason I wasn't going to stay home was because we had kids who were staying at home, who were at the, now doing remote learning. And we have a 16 and 15 and 17-year-old finishing, go through high school. Yeah. And I'm like, I'm not going to get any work done at all if I stay home. Yeah. And because we weren't seeing anybody in the office, and because my wife and I worked together and we're from the same household, we really didn't have a COVID exposure issue. Right. I did let my secretary go home for about 2 months. We brought her back in May. Okay. And because she felt comfortable, we have the social distancing going in the office. Plus, I could probably count with one hand how many clients actually came into my office. Everybody else was done through Zoom, which was a great thing for us.
Have you found that those Zoom meetings and interactions have stuck and been
Absolutely. In fact, in my website, if you want to book an appointment, you can actually book an in-person appointment or a Zoom appointment. And that's going to stay, because the beauty of the Zoom appointment, forget COVID. Right. The beauty of the Zoom appointment is that you and I can talk, no different than if you were in front of me. Yep. And I can share my screen with you and show you your tax return as we're reviewing it, which is actually easier than if you were in my office. Right. Because I have to turn the screen around or give you a third screen or print it and hand it to you. Yep. It's like on Zoom, I'm like, oh, well, check it out. We become this little screen on the right, and there's your tax return, and I can go line by line from within my software. And it was great. It was like, oh my God, how did we not think about this before? Right.
Absolutely. So, yeah.
Definitely.
Not to mention how much money Fred's saved in pants in the last 7 months. So it's really, it has its upsides for sure.
Yeah, especially when you start getting up. So I'm going to get my coffee. Yeah. Oh, don't get up to get your coffee, please.
Roll the chair. Don't sit
We're in a networking group together, and George did point out one day during the Zoom meeting, I'm just sitting on the couch, kind of lounged
with
out.
His shorts. The camera was just at the right angle.
Sure. I was just like, whoop, okay,
sure.
Time to sit up straight.
I'm just glad it was at least shorts. That's good.
Right?
Yeah, it was a lucky day for these guys.
Shirt, tie, and some cargo shorts, or what?
Right?
You had it all going on?
That's funny.
Well, that's interesting. One of the stats that I saw, and I don't know if you're familiar with this specifically, but in the third quarter of 2020, we've had the highest applications for new business startups than even last year alone. So safe to say that, maybe people that are getting laid off decided to finally pursue that new business, or business owners are transitioning and filing for a new business. I thought it was very interesting because as we talk about the federal stimulus through our pandemic nature and taxes and filing of new entities, like I know there's a lot of people who have the hang up of, oh, I need to open an LLC or start an LLC so that I can qualify to deduct business expenses or what have you.
Right.
But
That's a myth.
I would think so.
Right.
So, I mean, what's really when do you call someone's bracelet making business a business?
Well, the minute you start selling it and you have a profit motive, that's what the IRS defines as a business. If you're in it for a profit motive, in other words, you're buying and selling bracelets because you want to make money, not because you love bracelets and you just want to wear them all the time. Mm-hmm. So, what I wanted to go back to what you were saying is a business expense. It's kind of like the duck definition, right? If it walks like a duck, it quacks like a duck, and looks like a duck, it's a duck.
Right.
And it doesn't really matter if you're an LLC, an S Corp, a C Corp, a partnership, a limited partnership, a sole proprietor. It's still a duck.
Right.
Okay? It's a duck, people. So it means that you can still write off your car, you can still do a solo 401k, you can still write off your meals, you can still write off your equipment. It's all the same.
Yeah.
The difference is there's two levels of decision making, or flow charts, if you may, that you have to make when it comes to an entity. Mm-hmm. The first decision is, what's the legal reason you want to become an entity? So, for example, if you're a child care provider and you have a business of child caring, right? So you have, forget the pandemic for a moment, but you have a daycare facility and you're bringing in kids and you're responsible for these kids. Well, you better damn be a corporation or an LLC, because that gives you legal protection. I'm not an attorney,
sure,
but notice I haven't said anything about taxes. Right? So that's the first decision you have to make. So the second decision is the form of taxation within that entity. So let's say that you start a business and you're making, let's say, $100,000 net after all expenses. You're going to pay something called self-employment tax. It's basically both sides, employer and employee, of the Social Security and Medicare taxes. Mm-hmm. If you form an LLC and do nothing else, that doesn't change either the self-employment tax or the income tax you pay on that money.
Okay.
Right? If you elect to be taxed as an S corporation, it's an option that the IRS gives you, legal option. Mm-hmm. You fill out this form, you send it in, you're now taxed as an S corporation. The money that you make, that same $100,000, is now suddenly not subject to self-employment tax.
Interesting.
So you're thinking to yourself, wow, well, self-employment tax on $100,000 is about $15,000. I'm rounding.
Right.
So that means I don't have to pay the $15,000? Well, yes, but there's a big if, or a big but, actually. Mm-hmm. And the big but is that, first of all, the IRS wants you to pay yourself out of your S corporation a reasonable salary. The second thing is that the $100,000 that presumably you don't pay self-employment tax on is not considered earned income, which means you don't get credit for Social Security for retirement. You can't use it to fund a SEP, a pension, or an IRA.
Wow.
So because it's not earned.
Right.
So it's a kind of giveth and taketh, right? So you want the benefit of not paying self-employment tax? Okay, well, you don't get the benefit of it being earned income either.
Wow.
So you pay yourself a reasonable salary, right? Mm-hmm. Now you start accomplishing a kind of a blend of both, right? You pay some Social Security taxes on the $30,000. Let's say you took a $30,000 salary out of $100,000. You pay taxes on $30,000. Now you're crediting towards Social Security. The $30,000 can be used to fund a SEP or to do a 401k or something like that. And you get to take the rest self-employment tax-free. And that's a huge savings. But I always tell my client, you need to be very, very aware that what you're giving up over here, what you're getting over here, you're giving up over here on this side.
Yeah.
So yes, less self-employment tax, but less Social Security benefits, less ability to fund a pension.
Wow.
But it depends on where you're at in life. So if you're very young and you're just starting out and you're struggling or you need the working capital, pay yourself a smaller salary from your S Corp income, save the Social Security taxes now, but then as you start making money, start working it up to where you start putting in the averages for your Social Security retirement. Otherwise, you're shooting yourself in the foot, right?
Absolutely. Yeah. And so at what's kind of the revenue company business, what is the business revenue threshold that makes sense to go from LLC filing to S Corp?
So there's two things you need to look at. One is in California, there's something called an LLC fee. which kicks in when you have gross revenue of $250,000 or more. Now, you could have businesses that, make $1 million a year, but that's a 10% gross profit margin, so you don't really make a lot of money. You're just selling a lot of little widgets or bracelets, to use your example.
Yep.
But what happens is, because it's based on gross receipts, anything over $250,000, you're now going to pay not only the minimum $800 that every corporation or every entity pays to the state of California, but now it kicks in $900 if you're over $250,000. It's $1,500 if it's over $500,000. It's $6,000 if it's over $1 million. And it's almost $12,000 if it's over $5 million.
Wow.
So the minute you hit that, maybe not the 250, but the minute you hit that $500,000 mark, and you're now paying $6,000 to, for $1,500 for the LLC fee, now you want to start thinking about being an S Corp.
Right.
That's on the top line. On the bottom line, you got to be really netting more than $50,000 to make it worth it, because being an S corporation, forming an LLC and being an S corporation carries more expense, right? You have to pay me to do a separate tax return. You have to pay the state of California their $800. You have to pay a payroll company to do your payroll. So there's expenses involved in being an S corporation that, yes, it saves you the self-employment tax, but it's got to save you enough to make it worth doing and going through the trouble. Otherwise, it's not worth doing. So that's $50,000 is my kind of bottom line sort of litmus test, right? If you make more than 50, we can start talking about being an S corp. Or your top line is more than $500,000, and we do the math, right? We do the math because you still have to save enough money to, it might be cheaper for you to pay the $1,500 than to go through the trouble of being an S corp.
Yep, absolutely. And I think a hidden fact that most people don't realize, but I will form it in a question to you. At what point in your business, let's say going through the year 2020, you've now seen 10 or 11 months of numbers, and you're like, man, I might be hitting that number. Maybe, when can a business owner make the decision to make that switch to an S corp, and is it retroactive for that year or?
Right. Whether it's retroactive depends on whether you're already an LLC.
Yep.
So if you're not an LLC, if you're a sole proprietor, and you come to me in October and you say, I want to be an LLC and get taxed as an S corp. I said, that's great, but it's going to be prospectively. In other words, starting the minute, so you want to do that, run over to your attorney and file an LLC like right now. Because the minute you file that LLC and I pull a tax ID for you, you can open up a separate bank account, and that's when you start being taxed as an S corp, even if you haven't made the election, because the election doesn't have to be made for 75 days after that.
Okay.
If you're already an LLC, here's the beauty of the tax law, right? If you are already an LLC, you just formed an LLC because you wanted legal protection, right? And you're going along doing your pool business or your whatever car wash business or whatever. Or your whatever. Now you come to me in October and you go, oh my God, I'm making all this money. What am I going to do? I said, we'll just do a retroactive S election. It's called a late election. There's actually there's codes that you can put on the revenue procedure codes that you can put on the top of the form that actually allows you automatic retroactive election through the first of the year. So now all of a sudden you thought you were going to pay all these self-employment tax. You get this huge tax break by making that election. Again, you have to still pay yourself a reasonable salary, and go through the trouble of hiring the payroll company and doing it right. And you want to be reasonable. You don't want to take $1,000 salary on $100,000 of income.
Right.
Ironically, the IRS actually doesn't have any guidance on how much you're supposed to take. The only thing the IRS tells you is that you can't take zero.
Interesting.
And it has to be reasonable.
Wow.
What is reasonable?
It's a gray area. That's what it is.
It's very gray, and I'll leave it at that.
Yeah, absolutely. Fred, how much do you get into the? Sorry, I forgot you were here for a second. You've been so radio silent. Did you fall asleep for a second? Kidding. That's a joke.
I heard some snoring.
I did nod off for a moment. But
how important is tax planning for your clients?
It's actually really important. So for the clients that I have that have their own business, they do their tax planning. But for instance, today, we were lucky enough to have a nice 900-point drop in the markets today, and people are nervous about, just for the sake of where we are in history, or a week before the election. And I got a call today from a client that's nervous about the markets, and he called me up. He said, let's sell the account. And we're talking about $220,000 account.
No.
And so I explained to him the $62,000 he had in gains and that was going to be taxed. And that changed the conversation from sell everything to, well, let's keep maybe 25% of the cash to the side and just like a little dry powder so that if the markets do go down, we'll just buy back in.
Right.
So it's a big part of it. People don't realize sometimes, you do a panic sell and next thing you know, you have $10,000 in a tax obligation that you weren't considering, which could put you in a higher tax bracket if you're not careful on how you did it. So very big part of it. And that's why we use George for a lot of the advice we do.
For any of my bigger clients or business clients, for them to be facing a April 15th deadline and saying, oh my God, I owe enter the blank, is inexcusable.
Yeah.
Inexcusable.
Absolutely.
All of my clients, unless they choose not to, to look, right?
Mm-hmm.
Or they know that they're going to owe, even if they think they don't owe, they think they don't know.
Right.
But most of my clients who work with me or are proactive in their businesses and in their tax, in their financial life, they will know exactly what they're going to owe on April 15th by certainly before the end of the year.
Wow.
So they will either make an adjustment to buy equipment or do whatever they got to do to lower the tax, or make an estimated tax payment, or adjust their payroll, or they might make half of that money in an estimate and the other half they pay it on 415. And then I have some people who will pay some of it on the estimate, make an extension on 415 and pay the rest of it in October.
Right.
But they're aware of it. The key is that they're aware of it and they can manage it and prepare for it. There's nothing I get more heartburn than having a client call me up and say, yeah, my accountant did this and that, and I came on April 15th, and all of a sudden I owed $12,000. I'm thinking, how's that even possible?
Right.
It's like if he was looking at your stuff, you would have known that.
Yeah. Absolutely. And so how often are you meeting with clients usually throughout the year? How often do you meet with them to keep them in the loop and to know their situation? Right.
Most business clients really only require one meeting sometime in November or December.
Wow.
Unless they're unusually active or have an unusual change, which is like that one client, that one detergent pressure washer client that I was talking to you about.
Yep.
He came to me in July and said, can I say that? And so, it's like, I'm going to have trouble.
Yeah.
So we did planning really early. We projected the rest of the year, and we said we'll touch base again in September. We'll touch base again. That's unusual. Most of the time, people who have relatively steady businesses, they only need to meet with me once because I've already given them estimates from the prior year, and we kind of know their history. But once a year at least to come see me, come October, November, December, depending on the type of business and how much time they have, or how behind their bookkeepers have their books if they were not doing them.
Yeah.
Because that's another issue too, right?
Absolutely. So this year might be a busy end of year.
This year will be, it's kind of a split thing, right? Because you're going to have the businesses that basically went in the toilet and they don't have the tax plan.
Right.
They'll pretty much know they'll get a refund.
Yes.
And there's really no need for them to spend the money to come tell them that what they already know.
Mm-hmm.
And then you have those who did really well who have to come see me. So I expect us to have a busier year-end tax planning season.
Yep.
But it'll be an interesting dichotomy of, different situations.
Yep, for us all. One question that I had in follow-up to your S Corp, LLC S Corp situation is a lot of our listeners are into real estate and real estate investing.
Yep.
And some are opening an LLC for every single property.
Yep.
Some have, an LLC for a handful. But have you ever heard of an S Corp holding properties like is that a way to bypass some?
I actually have two clients who hold properties in S Corps.
Interesting.
And they flip them. They're flipping properties. But so I'm not an attorney, but I heard that even if you own an S Corp, the S Corp should be the owner of the LLC that buys the one property you're flipping.
Okay.
Or that buys the one, or that's in the name of the one LLC. Or if you're renting a property at an address, one address, that's one LLC that the S Corp can own, and then you have another LLC that the S Corp owns.
Got it.
But that's mostly for legal liability. So from what I understand it, again, I'm not an attorney, but from what I understand is you have a problem at a particular home that you rent, and you have multiple homes. That person is going to sue the LLC, and then it doesn't go beyond that. If you have one LLC that holds multiple properties, now you're opening up Pandora's box for exposing yourself to all the other assets that you have because of the one client who slipped and fell and whatever.
Absolutely.
But again, I'm not an attorney, but that's what I've heard.
But let's say you have these buy and hold rentals that are in an LLC structure, and you're like, man, I'm sick of paying self-employment tax. I mean, I guess would that income have to be
right? Yeah, rental income is not subject to self-employment tax,
so it's
no matter
all
what the entity is.
Unearned or passive.
That's correct.
Got it.
That's correct.
And so an S Corp doesn't really have its same benefits.
It doesn't work for rental properties, right? I have a client who has multiple rental properties here in Newhall. Does very well. Basically, they're retirement.
Yeah.
And they asked me several times, do you think I need to form an LLC? And I said, look, if you're going to do an LLC, it's because you want to protect yourself legally. Tax-wise, it's not going to make any difference, other than you're going to pay the state of California $800.
Yep. That's the big misnomer.
Yep.
Absolutely. Fred, any parting thoughts? Anything you want to ask a CPA for free on a podcast?
Well, George is a part of my networking group, and he made a wonderful presentation today in our group. Did a little bit of the accountant, brought in a little video for us, and
that was great.
Talked to us about something that actually hit home with me. Now that I am part of Prosperitas and I am self-employed, I am going to need the services of somebody like George who can help me figure out what real write-offs are and be able to save more of my money. Doesn't matter how much I make it.
Right.
Going right back to the beginning.
Yeah.
It's not how much I make, it's how much I keep. And I need somebody to help me figure out how much to keep. And I mean, as you know, before we got in here, we started in my office just kind of shooting the say it. He said it like 4 times, so I could say it once.
Right.
And just looking around, he mentioned something, and I'm like, so if I do this and this and this, I can write those off. Well, yeah, it's legitimate.
Right.
And so, yes.
If I can bring up one more point, I know you didn't ask me this, but I think it might be important for your listeners to know. There was a time where a lot of people talked about forming LLCs in like other states, and that somehow saves them taxes. It doesn't save you anything if you form an LLC in Nevada. Because if you're doing business in California, your Nevada LLC needs to be registered with the state of California, and they're still going to get your $800. And the income flows to you as a resident of California, and therefore you pay California taxes. So the only thing that's forming a Nevada LLC does is get you to spend $250 more a year to pay Nevada to have the LLC.
Interesting.
So I just wanted to throw that out there because a lot of people think that forming an LLC somewhere else somehow benefits them tax-wise.
I mean, that's huge.
And with that said, there are other reasons why you form LLCs in other states, and they have to do with privacy. So when you form an LLC in California, the statement of information is all available online on their website. They can see who the officers are, they can see who owns the LLC, who the agent for service of process is, everything. Other states don't have that kind of information available. One of the most popular states that people form LLCs in is Delaware, because apparently they have one of the strictest privacy laws. So if you want to form an LLC and go start, Wachtel Financial, and you don't want Prosperitas to know, you should open up an LLC in Delaware, and no one will know you own it.
Which I won't do because...
But again, I'm not an attorney, but that's what I heard. But for tax purposes, it absolutely makes no difference whatsoever unless you, as an individual, move to that state and become a resident of Nevada or Florida or one of these states that don't have tax.
Absolutely. Interesting. What if you lived in Nevada, had a Nevada LLC, but did business in, part of your business revenue came from California?
Well, depending on the numbers, California will want some, slice of that pie, and there's a formula, that's based on sales and payroll, and then you just file a California return and just give California their little piece of the pie.
So all these people leaving California right now will still be indebted to California to some degree, as long as they do business in California.
That goes for anybody, whether they leave California or have never been in California.
Absolutely.
So that's pretty much common everywhere. I mean, Michigan has a law like that too. If you do over, I think it's 500,000, they want you to register your business and pay them some, fee.
Yeah.
Or, Ohio has a tax called the CAT tax. It's the I can't remember what it stands for, but they have their own CAT tax, is what they call it.
Yeah.
I mean, all the states are out to get a piece of the pie of someone doing business from out of the state, because now with the advent of the internet and the remote business and your ability to basically do a business from anywhere, right. There's more awareness of they're out there to try to get the business, to try to get their tax dollars. That's very common.
Absolutely. George, you are extremely insightful on the subject of tax planning. Holy smokes. How can our listeners find you?
Well, they can go to my website, georgeperazzo.com. Again, it's George with a J, because it's jorgeperazzo.com. We do speak Spanish in our office. And you can also, I also have a Facebook page. It's facebook.com/George Perazzo CPA.
Perfect. So let's spell that out for the listeners. We got jorgeperazzo.com, jorgeperazzo.com.
Right.
And then Facebook at Jorge Perazzo CPA. So facebook.com/Jorge Perazzo CPA, or George Perazzo, right. Or George Parazzo.
That's right.
Doesn't matter how you pronounce it. Go find George.
A lot of AKAs with this guy. Yeah.
Exactly. Go find George. Go get yourself the best advice in town. George, thanks so much for joining us today.
Thank you for having me.
Fred.
Pleasure.
I don't know what to say.
You're welcome. Thanks for being here, buddy.
Hey, thank you. Thank you for having me.
Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA SIPC. Prosperitas Financial is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase of sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Robert Clark and Prosperitas Financial, and not of those of Next Financial Group, Inc. Next does not offer tax or legal advice. The S&P 500 is a market cap weighted index composed of common stocks of 500 leading companies in the leading industries of the U.S. economy. The Dow Jones Industrial Average is a price weighted index of 30 actively traded blue chip stocks.